Does anyone really know where the property prices are going? It's one of those investment slash necessities in life, because we all need one, at least one to live in. We're all interested in where it's going to go. A lot of young families want to get into the property market. A lot of people already invested and thinking about buying more. Obviously are interested to know where the existing investment is going to go and whether they're going to it's going to be a good decision to continue to buy more. So there's conflicting messages. It's really hard to make up your mind. See if you can. This is excerpt from the interview with Shane Elliott, who's still a CEO of ANZ, one of the big four banks here in Australia. And he was particularly asked about the property and their loan book. And then I'll share another clip that hopefully will answer some of these questions.
Today, capital city house prices fell for the first time in around 5 years. Does that make you nervous?
We watch housing really, really closely. It's our single biggest asset class. You know, at ANZ we've got about $250 billion of exposure to Australian housing. Our exposure on relative terms is lower than some of our competitor banks. Yes, we watch it really carefully, and that's why lending standards, making sure we're lending to the right people and appropriately is really, really important. So yes, we watch that like a hawk.
Does it make you nervous seeing house prices fall?
No, not necessarily. As long as the if the prices are falling for good reasons and in a smooth and reasonable way, no, I think it's actually probably a good thing to be right now. We've seen house price inflation slow down. I think that's been a good transition. Remember, this is after the years of very, very high inflation. So no, it doesn't, in and of itself, prices falling does not concern me.
We see in your numbers today that funding costs are starting to rise, if marginally, but the trend is definitely upward. The Reserve Bank is going nowhere in the short to medium term. How easy is it going to be for the bank in this heated environment with the Royal Commission, if you need to protect margins, to raise interest rates outside of the Reserve Bank?
Well, look, we have to run our business, and I don't know what the future holds in terms of our cost of funds. You're right, there are some early and limited signs that it's getting a little bit more expensive to raise money, certainly in the wholesale markets, not so much from deposits. The reality is we have to run our business, and we, as long as we make decisions responsibly, ethically, looking at all of the stakeholders, we'll make decisions as appropriate for the time. There's no doubt that increased scrutiny, and that's what we're talking about, whether it's the Royal Commission or just media or other community expectations, has increased. That and even the ACCC having a look at mortgage pricing, that means that we have to be really thoughtful about all the decisions we make, not just pricing and everything that we do.
So you've spoken today about, we've just had the golden years of banking really for the last 20 years. We've got increased regulation coming, we've got increased cost of doing business coming, we've got potentially margin compression with the cost of funding rising. So if I was an investor, why would I invest in banks?
Well,
this is a very good question. This goes back to some of the other videos I made where really the question is, or my recommendation from all the research is that you probably don't want to buy property right now. You also don't want to buy bank stocks. If your superannuation is heavily invested in a local market, chances are that banks will be a big portion of it. So I would probably change my plan to something a bit more conservative, where you kind of put it back into fixed income and cash until this cycle runs its course, where the banks drop, property drops. But then do we know? See, Shane Elliott actually just mentioned earlier, he doesn't know what the future holds as far as the funding cost. I mean, they're running a business that is all about the funding cost for them to get wholesale money. They don't know whether it's going up or down, or they absolutely have no idea how. So how are you and me supposed to know what to do next? So it's not easy, but watch this next one.
Welcome to The Business. I'm Elise Morgan. Coming up on the program, Lowering the hurdle for home buyers. What's in the looming federal budget to tackle affordability? And the US greenback back in the fast lane, why the Aussie dollar's slumped to a one-year low. There's been a recent slowdown in the overheated Sydney and Melbourne property markets, but Australian cities remain some of the most expensive in the world. The Treasurer is promising tax relief for middle to lower income earners in the looming federal budget. But as Emily Stewart reports, home buyers looking for a fix for housing affordability could be disappointed.
The Haynes family are rent investors in Wallet in the north of Melbourne.
I've got family around here, and then it's easy commuting distance to the city. And to get on your bike.
They moved here 2 years ago from Brisbane, where they own their own home, which they currently rent out. But they haven't bought in Melbourne because it's too expensive.
Renting is not so bad, but buying would be expensive. Even out this area, we're a fair distance out, and you're still looking 6, 7, 800,000, even $1 million.
It's definitely becoming less affordable across the board, not just in this area or all over Melbourne.
So up to $1 million for property out in the sticks with no public transport, very few schools, having to have a car to go pretty much anywhere. I mean, it's insanity, honestly. And it is Melbourne, which is kind of the second most expensive city in Australia, behind Sydney. So what's the future? I mean, how's this going to work for these young families? I mean, you're kind of trying to work it out and own property in Brisbane and then rent that out so you can rent in Melbourne. What's the point? It seems like you're just in this vicious circle where you can't escape.
Australia's 5 biggest cities are some of the least affordable markets in the world, with prices in Sydney almost 13 times higher than the median household income.
Yeah, 13 times higher. 13 times the median household income. I think the average, some sort of golden average, was about 3-4 times ever, long-term average. So 13 times? I mean, really? This is becoming a joke.
And despite price growth softening recently, the Federal Treasurer admits it remains just a dream for too many would-be buyers.
I mean, honestly, Treasurer admits that it's just a dream. I mean, we know that most dreams don't come true, and if they do, it's just fluke or luck. Or, I mean, don't mean to be pessimistic, but this presentation is sounding more and more like it. I mean, not that government's going to save you. That was never my view. But what's he suggesting? Let's see.
It's still tough. Of course, it's tough to save to buy a home. It's tough to buy a home in any city in Australia.
So of course it's tough, means that that's how it's supposed to be, and that's pretty much everywhere in Australia. So thank you very much. My name is Mr. Treasurer, and off you go. Good luck with it. Yeah, that's what he's saying.
It was a key issue in last year's budget, the federal government announcing housing measures such as the First Home Super Saver scheme and concessions for downsizers over 65. Those concessions can't be accessed until the new financial year, so there are no figures on how many people have taken up the schemes. Despite calls to reform negative gearing and capital gains tax, the government insists there will be no changes.
I spent the last 30 years arguing that changes to the tax system to reduce the incentives that the tax system provides for well-off people to inflate the price of the housing we already have by investing more in it would also be very helpful.
Well, my view hasn't changed. It would damage the economy.
So what the Eastlake says is, and I've seen him before, and he has been saying and talking about this for 30 years, is that you really have to stop negative gearing. You have to stop incentivizing people who have 1, 2, 3, 4 and more investment properties into investing more and pumping the prices up, because that is reducing their taxable income through the negative gearing. I mean, why give this concession in investing in property and not investing in anything else? the share market investment, anything else. You keep money in the bank, they tax you at the top marginal rate. So why not incentivize people to save? No, because as Treasurer said, it's not good for the economy, because the whole economy, the second biggest employer and everything else is around just building new stuff and bringing more people in and just continue to building. It's almost like a pyramid Ponzi scheme, but when does it end?
The last federal election, Bill Shorten pledged to scrap negative gearing on new purchases of existing properties and lift capital gains tax. But awash with revenue, it's understood the Treasurer will announce income tax cuts.
By offering, as it seems they're going to do, personal income tax cuts over the next decade, that could enhance the capacity of first home buyers to save for a deposit and then subsequently to service a mortgage.
Independent economist Sol Leslake says the main housing measures are likely to centre around social housing and renting.
All the indications are that in the new agreement between the federal government and the states for the provision of affordable housing, the federal government will be imposing more conditions on the states and expecting them to achieve more with regard to increasing the supply of affordable housing in exchange for the grants that the federal government gives.
But the deal could also include controls around supply targets, planning and zoning reforms. This is the very outskirts in the north of Melbourne.
Okay, this is the outskirts in the north of Melbourne. They're flattening the paddocks and making houses and hoping that someone's gonna move. And unfortunately, poor couples and people who can't afford anywhere else will be moving in, struggling, having to have 2 or 3 cars and paying the regos and increased taxes on it. How's this going to work out for them? And then having to travel for hour and a half to their job. What a life.
And as more and more of these paddocks open up to development to try and improve housing affordability, the biggest issue here is the lack of infrastructure, like schools and public transport.
It's okay.
But for the Haynes, the problem is simply the prices, as they look elsewhere for an investment opportunity.
I'll give you a brochure.
Thank you very much.
Floor plan on the back there. Feel free to come in.
Okay, thank you.
So rent vesting is the way to enter the market for this family.
We can live where we want to live and pay substantially less while we've still got property that's obviously getting a rental return and getting paid off by the tenants.
So yeah, feel free to see the rest of it.
They won't be looking to next week's budget to solve their affordability issues.
Yeah, don't be looking to the next week's budget to solve your affordability issues. It'll have to be some sort of free market, but is it a free market when the government is again having all these incentives and really manipulating it by allowing people who are not supposed to buy to stretch themselves completely and buy, and then those ones that already have investment properties to buy more to reduce their income tax, and all of these measures actually push the prices up and not help the affordability that they keep telling us they're trying to solve. You want to try and solve the affordability problem, you get out of the regulating the free market. Leave it up to the free market. Let people buy what they want to buy, and have competition in the banking. Get more players in. And see what happens, really. Instead of just artificially inflating it by quote unquote their affordability measures. Well, with that, I'll end this presentation, but I am going to make another video on, so stay tuned, on what I think this Royal Commission, Banking Royal Commission, is set out to do, what it really is going to do, and what that means for the future of the capital markets and the money markets, meaning what does it mean for us who need to borrow money to buy things, including property. All right, take care. That's it for now. Bye.